The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and we're looking at Dow down 62 at 25,893. I'd like to take a moment here and just to kind of free think. That's where I do the best. That's when at least when I'm on my own, that's what I do. Let's see if I can do that here. Let's just go to Investors Business Daily. One of the reasons why I'm looking at this and I'm saying, I know that in every instance, all right, not every instance, but 90% of what I'm looking at suggests that this is exactly where you would see some kind of stalling motion in the markets, in the different stocks. However, when you look at something like a Nike, which is NKE trading at 83.78 down $1.05. Now there's some incident about a sneaker or something like that. I just heard on the news. Look, it goes from 86.04 in September, all-time high. And it has a little bit of a slide. It slides to 66.53. So it goes trough A, trough B. On the way down, we talk about troughs, not peaks. Trough C, oops, I typed that wrong. Doesn't matter. That is a B, not a V. And then it makes a turnaround, but it isn't just a turnaround. It is a turnaround that, in essence, comes back even quicker than it went down. This is one leg. It went down in trough D, but it went up in a single leg A to where? 85.78. 86.04, subtract 85.78, and I would say at 26 cents, you're just about there. And now there's some bad news, but it's pulling back. But it's at a peak F with a doji candle, actually a gap down. Doji candle right there on the 15th of February. That says that MACD is just turning down now. Stochastic still over 80% at 81%, but the relative strength is turning down. The stochastic's turning down. This is a leading stock. I think it's time for a little bit of a rest. Not a big, I'm not saying crash. I'm saying a rest. Let's look at your IBD list. All right, so they have KL, stock that I'd be, until I saw it in Investors Business Daily, I never even heard of. KL is gold stock. It's called Kirkland Lake Gold Limited. I wonder if it's related to Costco. In the old, they have everything from diamonds to tires. Maybe they have Kirkland Gold as well. All right, so Kirkland's trading at 36.05 at 263. Had a spike today, even though gold is down sharply. Good old Kirkland is up in leg E in the daily, gaps up, and leg F/B in the weekly, and a leg, I haven't finished the monthly because I couldn't believe it. I've known about the stock now since I looked at IBD, a number of weeks, maybe a couple of months now. But KL, look at that move. It's spectacular. It deserves a little bit of a breather. But that's gold. That's separate, something completely separate. But BEAT, it just says everyone BEAT. Look at this. BEAT is biotelemetry, medical devices, heart monitoring. It was on our list, my subscribers list. I've got a list that a lot of people look at, and on their own, they do their own analysis. I can't do everything. I don't like really to have more than 6 or 7 positions for subscribers. It's really hard to keep up. And if they're working well, you don't need more. So look at this. Makes a peak F. BEAT is the symbol, 73.94 down $1.44 today. Makes a peak F at 80. Let's see. On the 5th of February at 80.92, it makes a high, pulls back to the 70 level, bounces to the 76s, and now it's trading at 73. This looks a little tired, that it's going to have a bit of a rest. A leg, I've called this a leg F in the weekly chart because it's skyrocketed to a new all-time high after going from 75 down to 50. You know, all of these stocks, 25% pullback. That's serious stuff, right? That's usually what you see over a period of a year, and then it takes a long time to make 15%, certainly on indexes. We just did 20% in most of the indices. This is time for a rest. So that's beat. Let's look at team. Another one that's on our list. Atlassian Corporation, I think they're in the, I don't remember what they're in. Makes a peak F/C right there, same day. Everybody's making the top within the last week. So on the 13th, it goes to 107.20, trading out 103.68, no big deal. But it started the down move in the shorter term. Only a leg C in the monthly. This is going to go to all-time highs at some point. Leg E in the monthly chart. I mean, I can just go through it. Let me, without even speaking, let me just go. Vive, which is Viva Systems, cloud-based business solutions. Doji PD 3 days ago starting to pull back. Technicals are pulling back. Leg D in the monthly, whopper of a move. It goes from 109 down to 80, and then it goes from 80 to the most recent high of 122 or something like that. I mean, these are incredible numbers. Let's look at Okta. Someone said Okta. When did I do Okta? Haven't done Okta, but I had done Okta, but it was on my list a while back, and then I said, I just did too many things we've got. So it goes from the high of 75, all-time high, down to 41 in the December plunge, November-December plunge, and then it rallies to where the high just the other day, and let me call it A, B, C, D, A, B, C, D, second D, and it makes a second buy mode completion at 87.72. I think it's time for a rest. All right, enough of that. I could just go on and on and on. I mean, on and on and on and on. Don't need to. I got my point across. My point is, now I'm going to run the numbers. INDU, the Dow, trading at 25,874, only down 80 points, no big deal. If the Dow starts to test 25,630, that's 250 points from here in the next 2-3 days, and then closes in the 25,500s, my guess is that we've begun a consolidation that could take a little time. I'm not so much sure yet about the price. I can go only one level at a time. Why? Because when you've had these incredible up channels, those up channels, to break this up channel in the Dow, you'd have to go under 25,320. That's a lot of points. That's 600 points from where we are, more. So it's going to be time. A break into the 26,150, 26,200. Nope, we're not ready. And then I have a design that I think would fit appropriately for the pattern that I'd be looking at. But in the meantime, we're going to go one step at a time, and a spectacular move in the Dow from 21,700 to the most latest high of 25,986 in one fell swoop, a leg A to the upside. Incredible. It really is an incredible move. All right, let's go on. I wanted to just show you crude oil is just pulling back a little bit here, down 31 cents. I'm calling this a peak F for now. I think that crude oil has had a fabulous move. I think it's going to digest a little bit here, maybe try to test the 54s, maybe even the 53s. And then I think there might be a move to the 59s. We'll see. So that's kind of what I'm looking at. The TLT did not rally sharply like it should. Instead, it plunged down 1.11, and that takes me to the next step, which I think is going to be interest rate related. That's what I was hinting at yesterday when I said the Fed. Well, we'll talk about that when I get back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Now, folks, so we're back, and I was looking at the TLT. So now this is going to be very important. Look, the TLT trading at 120.86, with the market pulling back, should actually have been steady to a slightly higher. This is just my reasoning over the years, that money comes out when there's volatility, meaning market going down in the actual equities, and money goes into bonds. So kind of what it does. This is a little different, and this is saying to me, and that's what I was kind of hinting at when I said, I'm not sure if it was yesterday, but recently I was saying that the Fed kind of missed its time sequence. They could have just been slightly raising rates for a while. One of the reasons, the only reason I think they could have done that legitimately, was to say that we need to have rates a little higher, because if there was any big market weakness at any point and we needed to get that plunge protection team working and sell bonds, we want that leverage. We don't want to sell from when it's like, tiny little percentage interest rate, and then have to give that up and then give even. So that's why one of the only reasons. Now, in the TNX, you've got a pattern that I call the lowercase h that goes to a lowercase m, and that lowercase m can be repeated a number of times. Look at this. It's been repeated a number of times, smaller and smaller. But at 26.93 for the 10-year yield, if that 10-year yield at 26.93 right now starts to climb to 27.50 in the next 2 weeks, and then all of a sudden, it'll happen real quickly if it's going to happen, rates start to rise without the Fed even opening their mouth. That's collective mouths. Wow, what are we doing then? That's going to be very interesting. And then all of a sudden, the HGX, which is the housing sector ETF, the Philadelphia housing says that's CFG. So it's going to a GC. It isn't done yet. So G/C with the technical still pretty good, but starting to turn down, but still very good. 92% in the stochastic. MACD is good in the daily, way above the 200-period moving average of 280. It's at 286. This is the HGX Philadelphia housing sector. I show this to subscribers every weekend when I give my overview of the market and what we're looking at and why. This is going to be very important because if the housing sector starts to stall here and toll, remember today I'm just free ranging here, which kind of got stuck in the 37s and starts to pull back to the 35s instead of hitting the 38.90 to the 39.30 area within another couple of weeks. That's going to be a problem. So this is what I'm looking at. Now, I showed you just oodles and oodles. I've been doing the work on really important stocks and where they are and what's going on. Let's even look at a UTX. I haven't looked at it today. UTX was screaming high. It went to a doji candle leg F yesterday. It's making a peak F today with a high. It goes from 144, 44% correction down to 100 on the 26th of December, screams back up to the 129.64 level. Let me type that in, 129.64. And that was yesterday. Today's trading at 126.58, no big deal, but it does say there's a potential change of direction here short term. Weekly chart is still very strong. So what I'm saying is that if this continues, and I believe that a lot of people never got even back to fully invested after December when they got out of the market in the rally, and even if they got in, they're not fully as fully invested as they'd like to be. So that says to me there's a cushion on any major selling unless the news is so bad it just scares the data out of everybody, like it did in December the 26th, that extra deep move to the 400-something points to the downside. So I'm looking at this and I'm saying, UTX, this is a great sign of the big cyclical sector, the industrial sector of the market, United Technologies. I want to see this rally. I want to see this up in the 135s, starting to getting closer to the 144 all-time high. I think it has to wait a while, but I think it will get there. So I'm looking at this and I'm saying between 121 and 118 would be a perfect place to start looking at UTX for anyone interested, because that to me, there are two Chapman wave buy modes with an instant restart. You don't usually get a third, you get some kind of a correction. I think we're about to start that corrective process. So these are all clues. I just wanted to spend some time today saying this is what I'm looking at. ASA is a gold stock that I very often, I always look at. It's because of the five South African gold mining companies. It just happens to be, I think it's registered in Bermuda. And I'm looking at it and I'm saying, wow, a spectacular move from the 8.28, 8.35 area to the high yesterday of 10.81. I think it was 10.81. And now it's trading down a little bit. Leg D in the weekly chart. I think it just needs a breather. I mean, gold has made a significant low, and now the weekly chart is saying is probably getting a little bit overbought. If you look at the GC contract, if you look at ASA as well, GC contract leg E just missed making the left side, right side cup formation high that was made at 13. I think it was 1363. Let me just double check. 1353. I meant 1353. The high yesterday was 1349.8 in the continuous contract. Just needs a breather. Maybe test the 1310 level, 200 period moving average. Could even go down a little bit more. Maybe if it breaks 1318, 1310 to 1306 would be a good area. And the dollar, well, let's go to the euro, EUR USD. Remember free thinking day today? Euro is down at 1.13. Just does not look very good at all. Not here. USD JPY, the yen, holding very steady, just bumping up against the 200 period moving average at 110.78. Just it needs to break into the 111.80s and hold there. That'll be very good action. So far it's holding steady. Timeout, that's all. It's not a big deal. It's a timeout. We want you to look at, someone said SMHs, yeah, the semiconductor down just 9 cents at 103.29. G/C. You know, this is, boy, if ever there was news and markets just completely ignored it. Now, you remember, I was hearing, but I didn't just listen to what I was being told, that the semiconductor industry has just been hammered. They had no clue that such a big pullback was coming, because all of earlier 2018, they were projecting way ahead with earnings, etc. Then when they realized it, it was almost a year, and it got in less than a year. So from March high of 114s, it plummets down to 80. That's a huge move, 30 points. And then it rallies back 30-something%. Then it rallies back to plus 27% to the 104 level. And now it's trading at, was that 104? I think it went higher. I think it went to 104.03 on the 20th. And now it's pulling back just a little bit. It hasn't even started its correction. So until the SMHs get into the 99s, the technicals are starting to weaken just a tad, but there's still 92% in the stochastic. MACD hasn't crossed negative. Just there are hints that it's getting a little toppy, but until it really breaks down, I don't think the market itself will break down. And therefore, at 103, it's even 101.50 that'll start me saying, whoops, now it could be a deeper correction. But so far, it's just the start of one, okay, the start of some action that is a little bit negative. All right, I'll be back. Basil Chapman, Tiger Conditions Hour, Dow's down 73. Be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I'm just checking out some of the questions. ARWR, yeah. So NBEV, I was asked about the other day. I said, let's hold off. I look at it again over the couple of days here, and it's still at 627. I think it's still consolidating. Let's see how if it stalls the decline at 610 and finds some support in this cup formation, in this arch formation, lowercase h pattern. If it does that and it starts to bounce, I'd look at it because there's a chance it makes an M. So at worst, you go from the 627-ish area to the 646, 650, and then maybe it stalls again, makes another H. But that's the way I would play it. I wouldn't be diving in right now. I'd have to wait. Next question was what was the question itself? Hi, Basil, can you please provide an update of ARWR? ARWR. This is Arrowhead Farmer. My long email below details the positions I hold, but probably tough to read while you're on the air. Thanks, Dan. Yep. So, boy, yeah, I want to read this because you've done some good work in the past, and I'd like to follow this up. Okay, but let me just do a purely technical analysis. In the monthly chart, it's gone from an A to a B to a C to a D and then an E. So it's gone from the 1-ish area to the 22 area. I'd say that's a 20% gain. A 20 bagger pulls back to the 10, just over 10, and then rallies to the 17 area where we are right now. In the weekly chart right now, am I going to take it from the low? Yeah. All right, my eye says it's probably A, B, C, D, E. This is probably an E. I don't want to just guess. I just want to look at the patterns. You don't even have to know the Chapman wave notation, other than to look at the pattern and say, hey, there's a very deep cup forming. The MACD in the weekly is positive. Stochastic's 85%. It's gone from that 10 area to a peak A at about 15.0, 1510. Let me just check. From there, so this is a gray A and a gray B with a potential doji candle for this week. I just wanted to do that, but this is the one I want to spend a little time on right here in the daily. So we go peak A, peak B, C. Pulls back as an A and a B. That doesn't count because the C continues. That's the highest letter. And that highest letter goes to a D, a doji D with a silent doji, Chapman wave silent doji today if it closes anywhere where it is. So I'm going to do this. I'm not going to even know that you're along different positions. I'm going to look at the chart and say, what would I do? Here's a lesson. I said that I'll do as many lessons as I can on the Chapman wave methodology because there are so many. I needn't be afraid somebody's going to steal my concepts. So if I went to that peak for a left side, right side price time match, I'd almost be there. So I don't want to do that. It's not going to jump from the 17, even if it's a biotech pharma, even if it has great news and it suddenly spikes up. I don't think it's going to hit 20 just yet. So I'm going to be very conservative. I like to always be conservative in this particular series of methodologies that I show here, because that means you're not surprised by anticipating. You know how everyone that you hear, say on CNBC, and they're talking about the market or something, and then you remember when they were talking about Bitcoin and they were saying 40,000 is a layup, and then someone would say, oh, he says 40, I'm going to say, and then he'd name some outrageous number, and he'd say 50, and the next one said 60, all the way through January of last year. Well, look where it is today. So this is a B- failure. So yes, this is what I'm doing. I'm going to the high that was made at 20.31 on the 4th of October of last year. 20.34 on the 10/6. I think that's what I said. Anyway, 20.34. I'm going left side, right side price time match, and then I'm going to take. I said I'm not doing this one. Sorry, my mistake. I said I want you to go to the exact trough. And that's this trough right here, the doji candle, beautiful doji candle at 10.41. And you put in 10.41. Remember, these are lessons, folks. You can look at them over and over and over. I hope you learn from them. This is only what I learned, by doing it. So that's going to be my left side. This is my right side right here. Just extended. There it is. And that takes me all the way to March. No, it goes further than March. No, it goes, beginning of April. So I'm going to, just for the purposes here, to the right, I'm going to go 17, 18, make it. Okay. Now what I'm going to do is I'm going to go right there. And this is my projection. So it's a little far out. I'm not sure how I'm going to compromise, but I would do it in such a way, you know what? I like to be very strict with these things. Okay, in the very broadest sense of this technique that I'm showing you right now, I'm looking at the period in March to get to 20, from here to here to here to here. They are. So that says that ARWR, Arrowhead Pharmaceuticals Inc., should make the 20.34 level by the 15th of March. All right, that's probably the most conservative. I'm going to be a little bit more aggressive. No, I don't need to be aggressive. No, that's exactly right. Wow, this works perfectly. Okay, that's exactly the way I like to do it. I'm going to put it in here and we'll come back to it. Left side, right side. And now I'm also going to tell you all the resistance points that you'll be looking for. There's your plumb line. Remember, the plumb line should be straight. A plumb line is a plumb line. Otherwise, what's the point? There it is, plumb line. Okay, so we've got a little doji candle right here at 18.54. That was right at this Chapman wave inside wedge. Let me write it. I'm putting all these techniques in. Some of you might want to print it out. Chapman wave inside wedge. This is the target resistance line. So, whoops, wrong way around. Too many things. Oh, there we go. Okay. So that says that this particular technique gives you very precisely what I'm looking at, why I'm looking at it, and the methodology involved. So I'm doing this. I'm making it green because it's going up. This is the target line right here. And it says a pullback, and the next resistance will be at 18.64 to 18.70, and treat this line as the resistance to break. That would be my target. Got it. MACD is strong, stochastic steady at 95.77. If you ask me where would I add, I'd say I'd add between 1720 and 16.80. Nice. Okay, so that's that. Good question. Hope I gave a good answer, and I do want to type that into my notes here for myself. Give me a second. ARWR. Just put it in here. ARWR. Got it. Thank you. Okay. Next thing we want to look at is, what was the question? Yeah, weeklies. Yes, this is a great point GT makes. Only a leg A in the Dow. Surely you'd expect to go B and then a peak C and then a peak D. Absolutely. That's why I have to be bullish on the year 2019. I want to pull back. I'll be back. Basil Chapman, Tiger Conditions Hour. Dow's only down 56 now.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So the E-mini right now is down 7.50 in the there we go, in the 2-minute chart. We just made a peak E, and I would just say that if it starts to trade above 27.83, it's at 27.79 right now, 27.83 for more than 25 minutes, that's pretty darn good action. If, on the other hand, there's a sudden slide at 27.79 right now, it starts to trade for an hour under 27.73, 10-point difference there, I'd say is, you know what, we're probably going to close at the low of the day. All right, and leg D, peak D in the 5 and a leg D in the 10-minute chart. So we'll be watching this very closely. All right, let's get back to our story. Story here is that I had a question about the XLF. Yeah, I think the XLF right in this particular moment holding really nicely. I don't see anything disastrous in any move down because it has a lot of support in the 25s. It will be pretty negative if it starts to trade under 24.70 by the second week of April. March. It really needs to be trading above 27.80 the first week of March, let alone the second week of March. Otherwise, it's kind of stuck for now in the sideways range. So my thinking here is that it's time for a breather in some of the very best stocks and indexes, and that we might see a transition as some of the commodity agricultural, whatever it is, but a different kind of an area now that is going to start to find some favoritism, and then money will come out of stocks in certain sectors that have been strong in the industrials, etc., and then go into these more rarefied areas. Why? Because if you look at some of them, let's look at wheat. I mean, wheat is down from just recently in the 536 area in 2018 to the 480s. Yeah, it's a big move. And it was, in fact, up in the 620s back in even earlier in 2018. It seems to me that it should be getting ready for at least a rebound, and then you can start to see where support comes in. It's a process. It's not. I don't think there's a V-shaped recovery here, even if China says something. That's wheat. If you look at soy, soy is trading in this lower range, trying to make an arch formation, holding well off the low in the 880 area. It's at 910. But it's doing nothing. It needs to get into the 933 area to say, hey, I've broken out. I'm going for that high that was made back in oops, that wasn't December. That was it was December the 12th of 941. So that's what I'm looking at. There's a chance that these things could start to move. Let's see, I had a question about SB. which is sugar. You remember, this is not my area of expertise. Larry's the one that really covers these fantastically with his methodology. But I'm just looking in terms of the Chapman wave. Look, a peak C right here, 13.40 in sugar, trying to come off the low, trying to make a very deep cup. It was a little too deep for my liking. But yeah, a deep cup formation. If sugar can start trading in the 1370 area, that'd be very good action. But if it starts to pull back, breaks under 1250, it's at 1318 right now at SB is what I'm looking at. It's going to take longer and longer for that monthly chart to break into the 14s. Question CNTTF. CNTTF in the den. What is that? That is the what? Can Trust Holdings? Can Trust Holdings? Can Trust? I don't know this. Okay, here we go. Peak A. And the question is it ever going to pull back? C, D, E. This is an A, and a B, and a C. Yeah, I think it will. I do also think that it's got just a little bit more to go on the upside. But the big, it's 9.10 CNTF symbol at 915, up 0.38. You know, when you get, we've seen too many of these. They just have this beautiful up channel. They just don't break the up channel for more than a second, and then they back up. That says it has to break 8.25, 8.33 to 8.25 support. If it takes that out, then all of a sudden 8 becomes the 14-period moving average. Really, resistance has to hold. My guess is that if it takes out 8.25 support, is going to between 8.05, let's call it 8.05 to 7.92, somewhere around there. You just have to have patience. All right, marijuana pot, that is the can. I thought I didn't want to say anything out of turn, but CANN Trust Holdings. All right, I didn't. There's too many letters. Who's going to remember that? I'm not. CNTTF. CNTTF. You know, I prefer the MJ. The MJ is the one that real long. Maybe it's different. Oh, it's a different pattern. You know, I think yours is a much nicer pattern. CNTTF. It's just going to higher highs, as they say. This one looks like it's going to fail, the MJ. I think it's going to have a consolidation for a little bit. So, all right, there we are. Now what we're looking at is, okay, so back to free thinking. Within the context of the markets, if you're looking at crude oil pulling back just a tad, down 40 cents in leg F. This is a pattern. Let me just draw it in for you. There's a pattern that I've been looking at. I like patterns that repeat, and there's a pattern that's been repeating in different. It's just a pattern. It's not necessarily given to a sector or anything. And it looks something like this. You make the cup formation, you make a higher high. Then you make either a higher low or just slightly lower low. Then you make a cup that goes to a higher high. Now I think we got to expect there's a potential to come from 56.76 to test 54s. The chart itself says that if there's a move down to 54s, the momentum could be steep enough that it goes straight into the 53s, and then 52s becomes a really important support for crude oil. On the upside, if there is a test of 58, it doesn't even have to close there. If it just goes to 58, the chances are 59, the 200-period moving average will become a magnet and be a tremendous support and a boost for that. Let's just look at the E-mini. I was asked if I could do that. Yeah, there's the E-mini. I told you this is a peak E. I think there's a pullback from here, and there's your peak D in the 5-minute, and there's your peak D in the 10-minute. Let's think of this as daily, weekly, monthly. In fact, I was doing this the other day, and even as I like to talk to myself when I'm doing the trades, because when I don't do that, I tend to do silly things. This is why I'm listening to myself. And I said, oh, go to the weekly chart, go to the weekly. I was saying, weekly chart, what weekly chart? It's a 5-minute chart. I was just so used to it. I had given the class recently, say, daily, weekly, monthly, daily, weekly, monthly. It's not. It's a 2-minute, 5-minute, and a 10-minute E-mini chart. So it's just in this consolidation area. Hasn't broken down. The technicals are still good. We'll see. As I said, a break, certainly on the short term, a break under 27.76 would be a negative. We'll watch this closely. We've got a few more minutes to go. Okay, Basil Chapman, Tiger News Hour. We're about to go to the final segment. Any questions coming in, I'll deal with those. And I just have a couple of thoughts, because I think this is a really important phase right now that we're talking about on the shorter term, near to short term, and that will impact the more intermediate term. I'll be back.
We both know you've got what it takes to crush your goals with the will to make it happen. So why haven't you accomplished it yet? For most, the answer is fear. Fear is that limiting factor that stops us from getting what we truly want, but it doesn't have to. That's why on Wednesday, February 27th from 5 to 6 p.m., I'll be hosting my one-hour workshop, Overcoming Fear in 5 Easy Steps. Hi, I'm Steve Rhodes, the 2018 Market Timer of the Year, author of Mastering Probability, and an expert in human emotion. Subscribers to Mastering Probability gain free access to this extraordinary workshop where I'll coach you how to bust through your barriers of fear. How you respond to fear is what sets you apart from the rest of the crowd. Look, this could be the most valuable hour we ever spend together. So come to the homepage of TFNN.com and begin your 30-day risk-free trial of Mastering Probability and take the next step towards the life you deserve.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or PRIMAL for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Folks, don't forget, Steve comes up, Dave White comes up, Tom comes up after that. I'll be back with Tom later on today. So, look at Boeing, down 2.87 at 418.77. What a run. We spoke about this yesterday. It's even higher today, just fractionally high, but higher. But now the MACD's just starting to kiss the green line to the red line. It could turn down, but it's so strong, and the stochastic is at 96%. However, it could be time that it takes to pull back. It could be 3 weeks. In 3 weeks' time, we could be looking at Boeing, and it's trading at 382, and it didn't do it in one shot. It just did it in a series of jagged up and down moves with slightly lower highs and slightly lower lows as soon as it starts to turn. So we've got to watch it. Look, the Dow's only down 53 now. S&P's only down 3. This is a ruthless market. It's just a ruthless market if you want to go short. There is buying coming in all the time. I just got an email. Thank you so much, Basil. That was a fantastic review. I'm always suspicious when I get that. I'm waiting for the but. Anyway, there's no but. It says, and I'm happy to say it fits very exactly to my trading plan. Many thanks. So, Dan, good. I'm pleased that fits in, but that's good. That's the reason why you think it's so great. If I said something else, maybe you wouldn't have. Anyway, I'm pleased we're thinking along the same lines. So the PPA, which is the ETF for the airlines. Is this airlines? No, aerospace and defense. Look at that spectacular move, mostly because of Boeing. Look, Raytheon is not back to the all-time highs. The high was 229. It's slumped to 144. Now it's trading at 186. Not quite a 50% retracement. Doing very well, just over the. Oh, wait a minute. Is that a 85.30? Yep, this is G/C. Could be just a touch more upside, and then starts the consolidation. All right, so we're about to wrap up, and I'm just going to say to you, check out my opening call. We've got a new position today in something that I've never been in. I've been in the cousin, but not in this particular one. It's unusual for us. It's in an area that's just been hammered, not for a week or a day or a month, for years. So this is like bottom fishing, but I think there's a chance now that this thing could actually move. We'll see. All right, stay tuned. You got Steve coming up. I'll be back later on. Have a great day. Otherwise, check out my opening call, or I'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.